I think the China is going to favor its local producers like NIO and others, XPeng. And I think they're granting subsidies to NIO, which is the battery swap company, even on its very high-end cars.
Ask you a little bit more about Tesla. Obviously, you've been out there front and center years ahead when everybody was turning their backs on Tesla, taking another hit. The news out of China, they have certainly had some tough time. Their growth has slowed substantially. They've had a lot of headaches and protests in Shanghai after some accidents with its cars. Is the Chinese market at risk for Tesla?
I think the China is going to favor its local producers like NIO and others, XPeng. And I think they're granting subsidies to NIO, which is the battery swap company, even on its very high-end cars, which they are not granting to Tesla. So it's obvious, and it has always been obvious, that China would favor a local producer. But what we are seeing from China, and particularly Tesla, is exports into Europe. Where it does not yet have a plant. And what we're hearing is especially in Germany, but all over Europe, where their standards are extremely high for cars in terms of design and performance, that they would prefer cars from Shanghai, which is a much newer plant and much more productive, much more efficient in terms of perfecting these designs than is Fremont. And so I think we're seeing a big export market develop from China into Europe. And I think China will like that. China wants to be known not for shipping or exporting, cheap goods, but also high-end goods. So this could be the beginning of a trend. So is China at risk then for Tesla? I mean, I don't think they're going to shut down the factory at all. I think that factory will be used much more for exporting than we once imagined. I will say that Tesla's cars in China have sold very well until very recently. I'm sure the publicity it has received has cooled Tesla's jets in China, but it's been fortuitous that this export market has opened up at the same time.
Cathie, one thing I want to ask you, and we talked about it at the beginning, inflation. Your mentor, you and I talked about this just a few weeks ago, Art Laffer, you were in your 20s, you were focusing on the economy. It was a time where inflation was off the charts and everybody thought it would consistently stay that way. Laffer thought differently, and we know, well known in the supply side economics. Here we are at another time where the markets, the volatility is often guided by our inflation expectations. Is inflation going to be a problem in your view?
Well, we've been saying for some time, actually since the depths of the coronavirus, we were doing YouTube videos saying regularly, V-shaped recovery, businesses are way behind consumers. Consumers are buying all of these goods. In fact, that's all they can do because they're stuck at home, right? So they were buying non-durable and durable goods that could be shipped to them, right? Okay, that part of consumption is 1/3 of consumption, and a disproportionate amount or percentage of the market basket of consumers was in goods for the past year. Businesses didn't expect it. They were behind even before the coronavirus. They had been lagging in terms of capital spending, in terms of inventories. They were worried about inverted yield curves and China-US trade conflict. There were many, many concerns. So they had been dragging their feet. They got even further behind and still haven't caught up. So what's happening now? Double, triple ordering, maybe quadruple ordering, because they just can't get the goods.
Panic buying. We've been talking about companies panic buying too.
Panic buying. And so what I believe is we are setting up for a massive period of deflation.
NIO may not be a recognizable name in the US, but it's becoming a leading player in China's electric vehicle market.
We can really think of NIO as sort of the original Tesla of China.
They want to target the same market as BMW, Audi, Mercedes, Porsche. And they're essentially the only local OEM from China that's been able to do that.
But the company has had its fair share of problems along the way. NIO has racked up over $6 billion in costs since starting in 2014.
It's been kind of a rocky few years. If you look back 2018, you saw tremendous growth, and then you ran into the worst downturn in our lifetimes for the China automotive market.
It was burning, what, $500 million a quarter? When the stock dropped to $1, I mean, it indicates that it's dying, it's gonna go away.
Just a year ago, the company was on the brink of collapse, but it managed to turn that around and become the world's fourth most valuable automaker.
NIO is in serious financial trouble. In fact, they needed a bailout from the Chinese government just to survive the first quarter of 2020. And here we are today, NIO valued in New York on par with Daimler.
Despite setbacks due to the coronavirus pandemic, the company has continued to grow. In the third quarter of 2020, it reached $628 million in sales and delivered up to 12,206 vehicles.
If we think of 2020 in stages, the first third was a disaster for China. Sales at one point decreased by 90% in 1 month. But as the year has gone on, more or less, life has returned to normal. So they had their best month in November.
However, the company still has a long way to go before it can dominate the Chinese auto market.
You see a market that's still emerging, still dominated by combustion engine, but EV is increasingly growing very quickly, especially in the second half of 2020.
The hot names like NIO, XPeng, they're just like a very small fraction of even just the battery electric vehicle market. NIO is about 7%, XPeng is about 4%. They're just starting up.
This seems like there's no turning back at this point with Tesla's valuation just so sky high. It's the technological trend. We're going electric.
The company was founded by William Li in 2014 as Next EV.
William Li made his first billion in the internet business and then was inspired by Tesla. In 2014, he went to the Paris Auto Show, met an executive from Ford Motor Company, Martin Leach. They connected immediately and they had a shared vision. Let's build the Tesla for China from scratch.
This was a tech-backed venture and it had all the big names behind it, Sequoia, Hill House. Tencent itself took a huge stake, still has a huge stake.
2 years later, it announced its first vehicle, a limited-run supercar called the EP9, as well as the introduction of the NIO brand.
They put together this phenomenal vehicle, handfuls of them only, but just to establish the brand and the reputation.
Like Tesla, NIO has distanced itself from the traditional automakers, associating more as a tech company.
They make no secret of the fact that they're a tech company first, and they're highly inspired by Tesla.
The cars have some high-tech touches, such as an integrated smart assistant.
They have this cute little thing called Nomi. It's an AI assistant, and you can give it commands to do virtually everything you want. Put the window up, put the window down, temperature, music changes. Let's take a selfie.
NIO has emphasized that it's a lifestyle brand. Owners get access to a social network and private social spaces called NIO Houses.
These gorgeous places called NIO Houses where owners gather to go to the library, have their kids play, drink coffee, hang out. It's just a house, a community. So that's one big way in which they've driven tremendous levels of loyalty.
And it's similar, I think, to what Tesla has done here, to what Porsche has done. For decades, you have people kind of associating the brand with more than just a vehicle, but a certain lifestyle.
NIO currently sells 3 vehicles in China: the ES8, a full-size SUV, the ES6, a mid-size SUV, and the EC6, a crossover coupe.
Not only is China the largest market for premium vehicles, it's also the largest market by far in the world for SUVs. The Chinese love their SUVs.
Similar to the rest of the world, the SUV vehicle segment in general, and especially the premium end, has been growing very quickly. It's probably the most profitable.
In the Chinese market, there are lots of affordable EVs, but NIO and Tesla are on the higher end.
The pricing is premium, so it's the most expensive battery car in the market in China now.
NIO is targeting premium customers who like technology, and they saw what happened here with Tesla in the United States, that Tesla stole sales from BMW, Mercedes, and Audi. NIO is beginning to do the very same thing in its home market.
They really pride themselves on white glove service. For repairs, someone will literally come pick up your car. If you need to get charged, they have mobile charging trucks that will come and charge it, or someone will come pick it up. You just don't get that from any other Chinese automaker.
One unique approach the company is taking is battery swapping. In 2018, it opened its first battery swap station in Shenzhen and has built 162 locations so far.
Within less than 10 minutes, you can swap out to a new battery and be on your way. Now, other people have tried that before. Tesla looked at it years ago and dropped it, but NIO seems to be convinced that this is the way to go and that they're staying with it.
But some are skeptical that battery swapping is the future of charging.
It's not really a super long-term solution. I would say it's a short, medium bridge until we can get batteries that can charge ultra fast.
More recently, NIO is now letting customers buy its cars without batteries, instead letting them lease the pack, paying a monthly fee.
They introduced a new battery as a service platform, which they claim makes their vehicles just as cost efficient to operate and use as an equivalent vehicle from, say, BMW.
There are people interested in this battery as a service, but majority of people still prefer the traditional ownership.
In 2018, NIO went public on the New York Stock Exchange, raising $1 billion and valuing the company at $6.41 billion.
You sort of had this euphoric lead up to the IPO, and then you had disaster strike in 2019 with a perfect storm of events, both industry and company specific.
The entire auto industry was going through a slump in the last 18 months leading up to this summer.
Not only did the market decline, but profits also fell. In addition to that, the Chinese government started making noises about, hey, subsidies are not forever. We're going to make those go away too.
Faced with continued losses and insufficient revenue, NIO was forced to rein in its spending. It sold its Formula E racing team, and poor performance at the beginning of 2019 forced the company to delay its ET7 sedan.
They did have to halt a lot of operations. Things were touch and go earlier this year, but you can bet that they're restarting those efforts to develop that sedan.
It was also dealing with a battery recall.
Through the end of 2019, NIO was struggling, and in the first quarter of 2020, NIO got to a point where they said, in order for us to survive, we require a bailout.
NIO received a $1.4 billion investment from the Chinese government for a 24.1% stake, as well as establishing a Hefei headquarters to support the region's EV development.
They sold the stake to the government in exchange for the cash. For the most part, they were very favorable terms. And the reason why that is because the government is not really there to make money.
When the stock price came up again, they're able to secure some new funding and more or less pay off that loan. So they're not beholden to the government as they were.
The company was working on a Shanghai factory, but was forced to scrap it. Instead, it turned to JAC Motors to build the ES8 and the ES6.
They struck a deal with NIO, bring your products and your supplies here, we'll do final assembly, and then you take it from there. The beauty in that is NIO then says, oh, that $2 billion we needed for a factory, we keep that in our pockets for marketing or retail or service. That was a big risk, but it's worked out, so at least so far.
NIO, they are responsible for some of the capital expenditures. They have their own people there. They don't own the plant, but for all practical purposes, that plant is there for them to use.
Through the joint venture with JAC Motors, it recently reached a milestone of 50,000 vehicles produced. But NIO's production output is still small, especially compared to Tesla's Shanghai production.
Tesla, with this Gigafactory 3, so it can make, anywhere between 20,000 units to like 23,000 units a month, by far the highest capacity BEV OEM in China right now. The gap is pretty wide. It's going to take a while for NIO.
There's room for both Tesla and NIO to succeed. Each one's success is actually fed into the other ones. It's a battle between EV and ICE, internal combustion engine, not really a battle between those two.
China is the world's largest EV market, largely due to generous government subsidies and efforts to promote new energy vehicles.
China was determined to lead the world in electric vehicle technologies, and they put in place subsidies and other regulations to make sure that new startups like NIO would have the street paved with gold.
The government spent lots on subsidies, and there were a lot of companies that abused that policy to make it look like they were innovating and developing electric vehicles, but actually they weren't doing that much. And so when the government started to phase out that program, that affected the ability of a lot of EV companies to survive.
As the economy recovers, consumer interest in electric vehicles is growing.
Ironically, when Tesla started making the Model 3 in China, it was beneficial to all the EVs because it got people interested. It got buzz. It was a sort of halo effect.
As Tesla has grown more and more widely accepted in the United States and in China, consumers are having a rethink and going, oh, electric vehicle, that's a real option. In a recent survey of Chinese consumers, half of them said that they'd be open to buying an electric car. That's way up from a few years ago.
But Chinese customers are still price sensitive.
We are still a developing country, so majority of the consumers are still extremely price sensitive. One of the reasons Tesla did extremely well in China this year is because it had price cuts a couple of times. Tesla, where it is now, is 18% less compared to at the beginning of the year when Made in China Model 3 was just launched.
As China's EV companies look to grow, they may enter international markets.
Going forward, NIO would look to expand globally, no question about it. They have their sights set on Europe and the United States.
NIO said it plans to enter the global markets by 2023 and 2024, and would likely begin with Europe first.
I think they'll go to Denmark, Norway, maybe Netherlands first, given the consumer acceptance of EVs there, the subsidies, the government incentives.
But it may be a while before we see NIO in the US.
The Chinese would love to step inside the US market, but the reality is that in Washington, D.C., tensions between the US and China are at their worst in 50 years.
If the geopolitics were to change, maybe they would. But there's Chinese automakers that have wanted to enter the US for a while, and they've never really found a viable path.
Tariffs on Chinese cars currently at 27.5%, which would take their $60,000 car up to prices that no American would be willing to pay.
NIO is likely to benefit the most from domestic growth in the near term.
The monthly figures are showing more people are buying their cars. And if you're thinking about a future in which China is mandating, let's say a quarter of vehicles sold in the future must be electric, Chinese consumers are also getting more used to the idea of electric.
Once I think an aspirational brand takes off, it's very difficult to stop. I've talked to several people who never bought a combustion engine vehicle. They bought a NIO, and people think they're cool for buying it. And I can't remember a single time where someone told me it was cool to be driving a Chinese locally made car.
In recent months, NIO has seen impressive investor interest. Whether it can keep up this momentum is yet to be seen.
Increasingly, more and more people believe that this is a winner in an EV world. The $60 billion, $70 billion market cap, it's I think some people have a little bit of difficulty kind of comprehending that, like, how does that make sense? It makes sense if you believe in the future that these guys will be a winner and they'll have an iconic and aspirational brand. The extent to which the market is valuing these companies with pretty small volumes. We said 50,000 for NIO in an annual global market of 90 million, and yet to be valued on a par with Daimler, well above Ford or Nissan, the market sees something. Now, the market isn't infallible. Maybe investors have it wrong, but boy, it's worth taking a look at.